Welcome to Libertex. Rumors are circulating in the trading community about a potential silver short squeeze. Silver prices brushed past $30 for the first time in nearly 6 months, coming to levels not seen since 2013. Silver trading has increased exponentially this week, fueled by the excitement of recent short squeezes in stocks like Gamestop and AMC. While some are going all in on silver to cash in on the hype, others are convinced that this could be a diversion tactic conspired by the big institutions. Stay until the end of this video, as we'll break down the latest silver fundamental analysis and silver technical analysis to give you everything you need to know for how to trade silver in the short to mid-term, and how much credibility is actually there for an upcoming silver short squeeze. What the markets have experienced with GameStop recently is a testament to the power of social arc trading. We now know it is very possible to realize massive price movements based on the collective power of retail traders. Silver seems to be no exception. To start the first day of the February trading month, silver prices were up 13%, breaking 6-month highs. The rally began to heat up in the previous week as the silver short squeeze rumors were first coming to light, elevating silver prices upwards of 6%. Propelling the momentum is a popular trading community on Reddit known as wallstreetbets. Wallstreetbets gained worldwide popularity in the past weeks, being identified as the driving catalyst behind the GameStop short squeeze, as well as promoting interest in other potential short squeezes on stocks like AMC, BlackBerry, and others, realizing some impressive gains. While the silver short squeeze appeared on wallstreetbets, the original posting has now been deleted, after many users claim that this is a false flag diversion tactic conspired by some of the hedge funds themselves. Now, there is a clear narrative to hedge positions on silver in anticipation of the next major short squeeze. The world's largest silver ETF saw a new record $1 billion worth of positions on Friday, January 29th. The case for the silver short squeeze is based on the hypothesis that some of the biggest banks and hedge funds have been artificially suppressing the price of silver, and that an increase in buying could ignite a squeeze that could bring the large institutions to their knees. The idea behind this is that there is not enough silver to meet the demands of contracts, and that by collectively buying silver en masse, the result would force the physical delivery of silver, thereby causing silver prices to experience a squeeze. There does seem to be at least some merit to the claim that silver prices have been historically manipulated. A corner in the silver market was attempted in 1980 in an event known as Silver Thursday. The result of this was ruled as market manipulation, and the architects behind it ended up in financial ruin. The situation today is quite different, but the premise is similar, as it points to a squeeze on the physical supply side if there is indeed manipulation going on. However, a growing number of people in wallstreetbets and other trading communities are claiming that the silver short squeeze could be a hoax and nothing more than a complicated diversion tactic from the big institutions that are coming under attack as of late with GameStop and other heavily shorted stocks. While anything is theoretically possible, there are reasons that a short squeeze to bring silver to levels past $1,000, as is the rumor, unlikely. For one, there are no holders of massive short positions on silver. A major short float is a prerequisite for getting massive movements like what the stock market saw with GameStop. Furthermore, a deeper dive into the silver positions held by the major hedge funds suggests that these positions are long, which casts doubt on a sustainable jump in the price. In the short term, incremental increases seem more likely given the growing momentum trading communities have proven their ability to influence. Let's take a look at the charts to get a better understanding of where silver prices may go from here from a technical perspective. Okay, we are now in the Libertex terminal looking at the charts for silver, and a clear rally was experienced for silver, which was no doubt propelled by increased coverage for silver and the sentiment over the latest rumors about a silver short squeeze as the next retail target. Okay, so starting on January 28th, the move lifted prices up by over $5, coming and touching above the $30 resistance mark right here, which is a really significant move for a safe haven asset like silver. So what numbers should we be looking out for from here? So 30 and 28 would be the levels to watch for in the coming days, and 24 and 22 are the levels we need to be watching out for in case this move falls back down if we don't break and hold resistance above the $30 line. So this 22 resistance or support right here was tested twice previously, and this level has held up nicely last year with lots of support. The next target, if we do make another bull run over 30, would be 32.284, which was the high from January 2013. And if we have a really, really significant rise, it is possible that we could see silver shoot up to the $35 range. However, taking a deeper look at the driving factors behind this, it's important to understand the recent retail trading data shows that over 80% of silver positions taken up recently are net long, which could be an indicator that silver may fall back to support to levels tested around 24 or even 24 if this manages not to hold up, which, as you could see on February 2nd, we got a big red candle trying to fill in the gap right here. So after breaking this key resistance point here at 30, silver experienced this significant pullback on February 2nd, coming back to the mid-27s, taking a lot of the wind out of the most optimistic sentiment about this potential short squeeze that we see on internet forums as of late. Overall, though, the trend still appears bullish, with silver trading recently above the daily EMA, finding resistance around the original pandemic trend line. A crazy move towards 1,000 does not seem likely. Instead, if the bullish trend continues, silver remains a long-term play. The key areas to watch for February going forward from here with this increased sentiment would be the $28 and $30 levels. That's where, if you're bullish, you want to keep an eye on. Monitoring consolidation around this resistance here and here, the $28 and $30 levels, is going to be critical in order to make a break past 30 into the $32 and eventually maybe $35 range, getting to new highs not seen in years. What's your take on a potential silver short squeeze, and will you be trading silver this month? Let us know your thoughts in the comments to join in with our analysts and join our growing family of traders by subscribing to our channel and hitting the notification bell for updates. To trade silver, as well as other metals, stocks, crypto, forex, and more, head over to Libertex.com and create an account for free to start your trading journey today. We hope you have a great week in the markets. See you next time.